Hi guys, I'm Rich. Let's go through my top 5 things to watch for the week ahead in markets. Number 1. US, UK and EZ PMIs. With a growing focus on global recession risks, the latest round of factory and non-factory PMIs will be closely watched this week. Recently, we've seen a growing trend of outperformance in the service sector, while factory sector readings have remained negative and in some cases grown more negative. If this trend is seen continuing, this will keep focus on recession fears across H2 2023, pulling risk assets lower consequently. Number 2. US prelim GDP. The first look at Q2 GDP in the US will be a major market focus point this week. With speculation growing over a potential US downturn later in the year, traders will be keen to see how the US economy looks to have performed over the recent quarter. Any signs of weakness should put the focus back on rate cut expectations in the US, leading US dollar lower short term. Number 3. FOMC minutes. We've heard a fairly split set of sentiments from the Fed policymakers recently. While the broad expectation is that the Fed will keep rates on hold next month, traders will be keen to hear the details of the latest meeting, given the door was held open to further tightening if necessary. Number 4. UK CPI. The latest UK inflation data will draw plenty of attention this week. On the back of the latest BOE rate hike, the bank signalled that further tightening will likely be necessary, while inflation is seen to be holding at elevated levels. Now, with this in mind, this week's CPI reading will be used as a signpost ahead of the next BOE meeting. A sharp drop should help cool BOE tightening expectations, leading Great British Pound lower. However, any stickiness will keep hawkish BOE expectations firmly stocked, leading Great British Pound higher near term. Number 5. RBNZ rates meeting. The RBNZ has scaled back its rates projections in light of the weather emergencies and ensuing GDP damage seen earlier in the year. Consequently, New Zealand dollar has weakened. However, the bank retains its view that further tightening will be necessary, and on the back of the RBA frequently hiking rates, a fresh rate increase cannot be ruled out. You can of course click on the link in the description just below to see the full economic calendar with the previous month's data and the consensus expectation for this time. But for now, thanks everyone, good luck trading this week, and please remember to give a quick smash of that like button and hit subscribe so you don't miss more content like this when it's released.